What we're telling you we're going to deliver, we're going to deliver. We have a very unique platform of very experienced people. They've sort of seen it all. And what we do here is we don't pigeonhole anybody.
We've made some strategic add-ons. We are a force to be reckoned with. And now our market share across all of those service lines, are some of the tops in the city.
You can't replace years in this business. It's just you connect a few extra dots every year, and by the time you're my age, you know all the dots. The thing about it, when you get experience on my side of the business, is we don't have the answers to every question, but we know who to call.
So I got the three wise men of RIPCO Real Estate right here. We got Gene Spiegelman, head of leasing, Steve Preuss, head of sales, and Adam Hakim, head of debt. Welcome, boys.
Thank you.
Thank you, Brian.
Thank you very much.
Thank you.
Forward to it.
So we're going to hit on a few things, guys. We'll talk a little bit about RIPCO and the teams you're building over there, plus some headlines today. But just if we could dive in and get the ball rolling, Steve, I'll throw one to you. For the outer boroughs this year, how are things performing, and specifically in neighborhoods like Queens, where you guys are dominating?
Sure. Well, if you look at the overall volume of sales, we're right on track for last year. So what that tells us is that we've hit kind of a medium level as far as where people are comfortable with prices. They're accepting where interest rates are. Overall, my conversations tend to be mostly bullish towards the end of this year. A lot of that has to go around all the dry powder that's out there. It's been raised over the last couple of years, and from what I'm hearing from most people, especially institutions or syndicators, if they don't use it, they're going to lose it. They're going to have to give it back. So I think we are where we are as far as pricing goes, and with that dry powder, I think a lot of it's going to get put to use towards the end of the year going into next year. So overall, we've been, I don't want to say stagnant, but on pace for last year. But overall, I think we'll see a good push going towards the end of the year going into next year.
Do you think that this is a good time for the boroughs, or is this a great opportunity to enter into Manhattan and maybe chase some of the trophy assets that you could get Gene to find a tenant for?
I always think it's a good time for the boroughs, especially in some of these areas along the 7 train in Queens, some of the central markets. I think it's a great time. Still undervalued, still can be built out. I think there's a big need for more retail, newer retail. Development, obviously, that's taken a back step over the last few years. So we certainly need some more development in these markets. Workforce housing, which is obviously something that plays very well in Queens. But a lot of my conversations are people that now are going into Manhattan as well. A big percentage of our business this year has been Manhattan. A good amount of it with Gene and what we're doing over there as well on the sales side. But when buildings are now $400 a foot, $300 a foot. We've seen some go under $200 a foot. Obviously, those are more value add or repositioning. But nonetheless, when you see a building, at $200 a foot in Midtown Manhattan, people will come up with a business plan to make it work.
Gene, for you, like we're talking New York City here, and we got Times Square in the background. Is Manhattan still as important as ever for these big brands and these big tenants that you're working with?
Well, we think it's the most important place in the world. So that's our opinion. I think the brands feel that New York City is still the global city, and they want to be here. And whether it's SoHo or Fifth Avenue or Madison Avenue, they all ring important and true. And from I think a market perspective, I think we're into a 2-year trend line now that we saw start in the second half of 2023 with a leasing cadence that's been consistent, with a good amount of demand by existing brands to expand, relocate, new brands to come into the marketplace. Our retail availability rates have been cut in half since the pandemic period, and even from the pre-pandemic, retail apocalypse period that went from 2017 up to 2020. And we're having a very busy summer. Our whole industry is having a busy summer. There's a lot of tours. There's a lot of pipeline that's building up right after Labor Day, and we're busy. And that notwithstanding how I'm dressed today, we're busy, and I can't say that every mid-July we were feeling this way. So I think the market fundamentals are sound. We saw significant rent reductions from, I would say, 30 to 50% over the last several years. Some of these markets have the rents have come back pretty substantially. Like I would say SoHo is sort of led the way in percentage increase in rent recovery.
Is SoHo the best neighborhood for leasing in the city?
I say SoHo is the best neighborhood for global branding in the city right now. Yeah, so, and because I think we have pretty good leasing demand throughout the markets today. There still are some markets that, have been slower to recover, but SoHo is really at the top of the list. It led us out of COVID, for sure. And all the good space has been leased. You're looking at rents on Prince Street approaching $1,000 a foot. And that's fairly substantial.
If you've been wondering what types of deals we've been working on,
We made it easy for you. Just click on the link, show notes below.
we're talking real deals and real opportunities.
Whether you're an investor or owner or just curious to know what's going on behind the scenes.
Just click the link below and it'll bring you right to all of our available inventory. Is it, like, cyclically, is that the highest you've ever seen it? You've seen a few turns of these types of ups and down cycles. Is that as good as it's ever been?
No, it's. I've certainly seen a lot of cycles. This year is my 39th year in the business.
Don't want to age you. I didn't want to.
I've seen a lot of cycles. We've peaked higher.
Really?
And that was probably in the post financial crisis world, coming up to around 2015, 16. We peaked in rents where the markets shut down, because that's when e-com came in and the retailers didn't know exactly how to respond to that. So, like the highest deal on Fifth Avenue in that marketplace was Bulgaria's lease extension for $5,000 a foot at 57th and 5th. To me, that was the highest single rent on a per square foot basis ever paid in Manhattan.
What year was that?
That was probably 2015.
2015.
Yeah, about
and that was
2015.
right in line with when the sales was booming as well, right?
Yeah.
Those were hitting $300-400 a buildable in some secondary markets, and that was right 2015 to 17.
So exactly 10 years ago. And for you, Adam, I mean, not to age you as well, but you've seen a few cycles, right? And is this... And
Only 3 less than me.
By the way, this is 30.
All right.
30 years, we got 39 years, 30
I
years.
feel like the young guy
By
in
the way,
this
this is
panel
30.
here.
It's my
Probably
30th
100 years of experience here on the panel. But
We
for,
got
if
old
we're
men
just to
at the
focus
table
on
here.
Manhattan and New York specifically for another moment, is capital chasing New York City deals, or how are banks feeling about New York City? Is capital chasing New York City deals, or how are banks feeling about
I think there's a better way to say this, right? In the last 2 cycles, there was no capital. It didn't matter. Now there's money everywhere. There's banks, there's private equity funds. Every broker and every developer now has either Elliott or some large capital source behind them that they're using and becoming lenders. So it really has increased the number of lenders, and they're chasing. I mean, you have money, you have to put it out, and if you don't put it out, you don't make your bonuses, and so there's a chase. But it's disciplined chase this time, right? They're keeping inside their debt yields, they're keeping inside, kind of a box. They haven't broken out of that one at this point. And we were slow for a few years, so it really has been let's catch back up, let's get some deals going. Guys need deals. But yeah, Manhattan is it. Although I think the boroughs are easier to do deals. Rentals don't work in the city right now. Condos do, but land is challenging price-wise. The boroughs have a little bit more of a spread that you can either build
A little more
cheaper,
nimble.
you
Isn't
can
the,
price
isn't
better.
the available
I grew up
leverage
in Regal
creeping
Park,
up again?
Queens.
Can you get 70 or 75%?
Isn't the
available leverage creeping up again?
It is.
70 or 75%?
So multifamilies, we're doing 65%, pretty much across the board. In the last 6 months, you can get 75% leverage. Spreads have dropped to below 300 over pretty much everywhere. So multifamilies, better leverage, cheaper pricing. And so that, you can kind of squeeze yourself into a box.
Is there any
and that's
pricing
everywhere. That's
baked
for
in
each
based
asset
upon
class.
what will be anticipated rate cut later this year? Is that baked in yet? It's not baked in yet. So how do you think how will that impact the market?
Last time they cut no one really believed the back end of the curve went up. So I mean, look, last time they cut rates,
Let's ask
the
though,
high
do you
end,
think
back
that
end of the
there's
curve
going
went
to be a
up.
rate cut
So
this year?
everyone wants
You
it.
don't think any rate cut this year?
There's going to be a rate cut this year.
I think they'll hold off till next year. Maybe first quarter. No,
I don't.
I think they'll hold off till next year. Maybe first quarter, kind of get it ready for the midterm elections.
With a half-point rate cut
We really
at
don't
the-
need
the
it.
third
We want
quarter.
it, but we really don't need it.
Just visually.
It would ignite things a little bit. Just visually, it would ignite things. But I mean, look, we're getting into balance. We've been out of balance. We're getting into balance. People are figuring their way, through their problems and figuring out how to live inside of a higher rate environment here. So, look, I would love to see a large rate cut, but I'm not sure it's coming in this. I don't think, unless he steps down, I don't see it happening. Stock market's at an all-time high. Real estate's doing well. Retail's leasing up.
So why all the doom and gloom
Offices
out
are,
there?
are
Why-
doing well here.
Why every time I talk to an owner,
that's my
they're
opinion. We'll
upset
see.
about the valuation I give them?
I have no idea.
Why every time I talk to an owner, they're upset about
Well, because they have
Look at
cheap
the
money
POV
from
I
a long
gave
time
them back
ago,
in
and
2018. and
they
that's
have to
their point,
refinance it higher.
right? So that's just natural imbalance in the
Right.
marketplace where sellers
Right.
are always going to look at the value that they had a couple of years ago. But that is getting into line why we think that transactions are going to continue to increase, where that bid and the ask is getting a little slimmer over time.
I just also think it's a lot of short-term thinking. And, no joke, I've been in the business. July 17th is always a date for me. It's when I started. I was 21 years old, right? I started July 17th, 1986, 2 days out of college, I started this business. And if you look at the long-term portfolio holders in this city, what have they overall seen in the real story? Only appreciation, right? And you're talking decades, right? So you go through these cycles, these ups and downs, but at the end of the day, the trend line always goes up.
So is the lesson hang on in Manhattan or in New York?
The lesson is hang on, and it's long-term thinking. To your point, if someone's looking short-term, and short-term could be 7-10 years, right? It's short-term. But for investors, and remember, investment philosophy was not the philosophy it is over the last 2 decades, right? People invest in real estate. They didn't necessarily think of exiting. They say, we buy real estate, you hold real estate, right?
Well, they wrote their own checks. Now most people have some type of equity fund that they have to get, a yield on, a return for. So it's different equity.
On the institutional side, I think the middle markets, I've seen more generational and family office buyers over the last 18 months. And I was saying this coming out of COVID, that would be the way where institutions are really going to pull back. They're going to have to play defense. And the equity that they do raise, that's going to go after distress, right? They're going to not look for open market deals. So over the last 2 years, I would say probably 85% have been non-institutional as far as the buyers that I deal with, in that $1 million to $250 million range. And I think that's going to continue for a while as well.
So just to stay on the lending question for a moment, you're saying that it seems like it's functioning pretty well out there, but are you seeing an emergence of private lenders and private capital, or are regular traditional banks still king?
Look, there's still traditional banks, but North Fork, New York Community Bank, the local community banks are gone. And those that are still around have different requirements, right? You have to put 10% of the loan amount up in the bank. They're much stricter. It's just a different lending environment, less structure, more formulaic. We miss George Klett out there. He used to run North Fork. So
Signature left a big vacuum.
Signature left. Well,
right?
Signature, North Fork and Signature I was put together, and New York Community Bank, that whole First Republic,
Right.
that whole group has disappeared. And
It looks like Fingerman is picking a lot of guys up now at PPAC,
He's
right?
trying
And
to,
it almost feels like they're
Yeah.
putting some sort of team back together
Yeah.
that could
it's
fill a
just
little
they
bit
don't
of
let,
that.
they don't let them, right? They're just
Right.
not letting them do what they did before.
Right.
Right. And that's, so you have to go lateral. And the truth is the funds have gotten cheap money, not for long-term permanent, but for structured deals. The price of money has come down dramatically. And inside of that, you can make deals work. And, if you get a little bit more leverage, it's a little bit less equity, you can kind of finagle your way through. So, but you have banks, you have funds, you have insurance companies. Everyone has money. When you print $10 trillion bills, there's a lot of dollar bills out there.
There's a lot of money out there.
There's a lot of money.
Yeah.
Yeah.
If we could hit on some news headlines that are happening right now. So we're in the middle of July, right? 2025. There's a little bit of a slow news month, but there's definitely a lot of stories out there. So Zoran Mandani, and I'm not going to go to you on this, Adam. I'm going to start with Gene. So if we have, let me just set the stage for that. So Zoran is going to freeze rents on a couple of million of apartments. He's going to create government-run grocery stores, and he's going to make transport free, right? It all sounds like idyllic stuff, right? Who wouldn't be in favor of that if you feel like you can't afford this city or you feel like you're being left behind? But how does he pay for it all? And Gene, I'll go to you. What does that do for the retail life of this city. Thanks for listening to the Broker Brunch. We've now brought you a ton of episodes and we hope we're providing a lot of value. If you have any ideas of people you'd like to see on future episodes, please drop it in the comments so we can make it happen.
You know, there's a lot of things I could say to be coy about this, but put apart, for instance, what was the headline about city-owned grocery stores, and John Catsimatidis says, you know, that happens, he's going to close down Gristedes, close down Red Apple Group, right? He's not going to do business here. He's not going to compete against
That's
that.
like a 50-year grocer, right?
But the real story is, put out the headlines, and I think it's obviously an upside-down world if you have a communist running the capitalist, you know, global city of the world, right? But for instance, what will happen is the city council will take up old initiatives like commercial rent control again, and other things that people are not talking about that, you know, as a member of the real estate board in New York, we constantly would fight against. Like we really had to fight against things like this. And those things could become real with the makeup of the city council today. And I think if you look at something like commercial rent control, or they could say, you know what, we want to raise the commercial rent tax in New York City South at 96th Street. We want to raise that, you know, from 4%, we want to raise that to 6%. Or you can potentially see a situation where there's no commercial rent tax in the boroughs today, but they bring it back. There's so many different things beyond the headlines that really concern me, certainly for the health of my part of the business and for the commercial aspects of the city as well.
Yeah, I think that, you know, some of these things, and I think most of the things that he's saying out there, putting out in the universe, they're idealistic, at least in his viewpoint. He's not going to be able to do, and he's not allowed to do. So a lot of it will not come to fruition, in my opinion. The problem is that, you know, and there was this storyline or headline over the last few years that, you know, investors were rushing back to New York City, or recirculating their capital from wherever they put it from June of 2019 with the residential rent regulations or COVID. They went down to Florida, South Florida. They went down to Texas. They went to up and down the East Coast, places like Carolina that they were running back now because those areas have gotten so expensive. I think that was overblown a bit, but there was a lot of conversations, and we did see people start coming back and putting some capital back that has left New York to come back to New York over the last year and a half. The troubling part as a transactional broker is the conversations have turned once again, where the people who were looking to come back here are saying, listen, I'm getting a 5 cap down in Miami. I'd rather get a 6.5 cap here where I can kick the tires, where I can see the real estate. Those conversations have stopped and said, listen, you know what, I'll take the 5 cap, a better political system, you know, things that are going into favor down there, a lot of momentum, then coming back and bringing that capital here. So that, I think, is going to have, for the near term, more of an impact than what he is saying or these crazy ideas that he's throwing out there is going to stop the momentum that we were starting to get back here with that recycled capital.
Now, if you were to look at some of the other parts of his proposals, affordable housing, if we're in the boroughs, we do a lot of deals in the Bronx, Queens, around the city. Should we expect there's going to be more capital for affordable projects? Would that be one silver lining, or is that even a possibility?
I mean, you can look at it that way, but what you're going to have to do to be able to jump through the hoops that he's going to put there, I'm not sure people have the appetite to do that or trust him going forward that he's not going to layer in further you know, guard lines to be able to run that properly.
And to remove the incentive probably for any developer to go ahead and take a bet and do the project.
Correct.
Right. Adam?
Been waiting for this question. They're not as nice as these guys.
So from a lending perspective, if we look at it through that lens, are banks going to hold off?
Forget lending. Start with equity, right? If you're an equity investor, are you going to make a bet on something where you don't know the rules? I mean, it's pretty common sense. I don't know what the rules are going to be. I don't know if there's commercial rent stabilization. I don't know if there's free market apartments are rent regulated. So you just don't know. And equity does not accept not knowing. So that's the easy part, right? That everything is on hold basically until that gets, at least, you know, we can figure out where we're going. But this is deeper than that, okay? There's a gentleman from Uganda. Uganda, guys, okay? He's been here for 8 years. He has no idea who we are. He has no idea what we are. My father sold hot dogs on 42nd Street in a store for 58 years. I know what New York is, right? I'm a New Yorker. He has no idea. He's got this dream, this vision, this nonsense. Did it work in Uganda, big guy? Did it? It did not. That's why you're here. So I don't understand how we're even contemplating this. He's 33. He's got no qualifications to run the financial capital of the world. I mean, New York has come back. Retail's back. Commercial's back. Lending's back. People are back. They're coming back from Florida. Like, what's wrong here? I have a sitting Democratic police officer, African-American mayor. He's doing a good job. He's not charismatic, okay. But what are we thinking about here? This guy is unqualified. And every red person watching this, Republican, you better vote for either Cuomo or hopefully for Adams, right? You can't even think about this. My daughter is 25 years old, and she tells me that her friends are all contemplating voting for Zohan, which is nonsense. They're all educated in high Michigan, Harvard, yeah, you know, that world. And they're all dreaming about this socialized nonsense. And so someone like Bloomberg needs to get on television. He needs to do one of these, and he needs to educate New York and tell them what to do. And Bloomberg's the perfect person, right? Hey, guys, I'm here. Like, I did a good job. You know, let's all think rationally here, okay? This guy is the wrong choice. So I apologize. I had to get that out. It's just nonsense. We shouldn't even be talking about this. 33 years old, no qualifications, from a foreign country that doesn't have any idea what capitalism is. And he's going to run New York City? It's crazy. That's my opinion.
Yeah, listen, and it's a strong opinion, and I think it's echoed by a lot of folks in our industry, and there's
Yeah.
a lot of concerns out there. If we move on to more like positive stories, and
Okay.
I totally take your point on Zohan, and we'll see what happens.
Yeah.
But office really seems like it's coming back. Adam just mentioned it there. The city is
yeah.
alive again. We feel good. Why does New York City always get in its own way when it comes to building
Because
momentum?
it's special. It's the engine of America. It just is. It is the most important city in the world.
It's a money pot.
Right.
And it's a money grab. That's what it is. It's a money grab. And
Right.
the politics is about grabbing the money. And this city engineers money. And what this guy could do is he could cut off the money flow.
Right. Or
And besides, he's an anti-Semite too. I just got to put if we're going to have that
absolutely.
conversation. Okay,
100%. I didn't want to bring that up.
I'll
but
bring
yeah.
it up because I feel strongly about it too. But back to business. We have a regional issue, right? We have a regional issue in transportation. We have a regional issue in taxation. Now, for example, in New Jersey, though we're here in New York, right on the other side of the river over there, you know, the governor and the representatives of that state just voted in a transfer tax that they call a mansion tax, but now it applies to all commercial real estate. You know, 3.5% at its highest rate, I think, which you reach at over $3 or $4 million, and the sellers have to pay it. Do you know what it's doing to the market there? California did the same thing, right? And it distorts the market.
California had a 90% drop on activity after they put that.
Yeah. And now buyers and sellers are figuring that out in New Jersey. But all these things impact the region in total. What's happening here in Manhattan, what happens in New Jersey. And I will tell you, to Steve's point earlier, I had not one but two conversations today of hardcore New York investors who would not think of going out of state, who are going out of state now, taking their capital with them, two separate 1031 exchanges. And you know what? Millions, tens of millions, if not hundreds of millions of dollars of capital that will not be invested here.
And it will not come back.
Not come back.
Even the hardest of a hardcore New Yorkers, at some point in time, you get fatigued out. And I feel like to some percentage of the population here, of the investor population, this is going to be that time where they tag out, unfortunately.
It's going to go to Florida, Carolinas, Tennessee, Texas, Arizona. It's not going to California. And this is just a hardcore reality of what we're facing. But we come to work every day. We put a good face on every day. We've been doing my whole career, through every cycle, through the great financial crisis, through 9/11, through COVID, come to work every day. And I have to tell you, you know, we get exhausted from it. And I think, you know, when the big money gets exhausted, we're screwed. We are.
This was supposed to be the positive.
I was trying
portion,
to,
right?
even I can't make this positive, but I think this is real though,
It's a
right?
warning.
I think these
Reality.
are real
it's a warning,
conversations that
like
are
you're
happening.
talking to everyone out there. It's a warning. I hope the people watch this and understand what they need to do.
So what about foreclosures right now? So everyone last year was talking about, look, I want to buy notes, or I want to get in on
There's
that
a little bit
business.
has-
Are you seeing it, Adam? Is
Yeah,
it?
look, we're selling notes actually.
Right.
So my partner was the former president of a bank. For 20 years, he ran a bank, so we have been selling notes. He's good at it. So everyone's got a little bit. The government did not force, reconciliation. So you didn't have like the last cycle where everyone was dumping at the same time. So it's been measured. It's been steady. But no, we did not see that craziness that we saw last time. But when you look at the charts on single-family homes, people going into default, highest of all time. So, yeah, look, some cracks. That's why they want lower and cheaper money. But I don't know about that one. It's not a frenzy. It's not what we expected. It's not the RTC. It's not any of that.
What's causing the bottleneck?
No one's forcing banks to unload. And so why you're not going to take your pain today. That's why prices on land really haven't adjusted. Not enough anyway.
Thank you for listening to the Broker Brunch. If you enjoy the show, please hit subscribe so we can reach more people. Steve, you've created some real deep relationships over at banks. You've done a lot of that type of business. Is that what you're seeing as well? Is that what you're
There
hearing?
was not the tidal wave that everyone was hoping to see and raising capital around, which goes to my point about all the dry powder. A lot of that was raised around the idea that someone was going to raise 100, 200 million and be able to spend all of that within the next several months on distress, foreclosures, but that hasn't happened. I mean, just myself, we sold also a few notes. Couple foreclosures, bank sales, but it really hasn't been too much out of the ordinary that I have done over the last 24 years. Maybe a couple extra every year, but it hasn't doubled or tripled, and that's why a lot of that capital is still out there because they're not able to find the deals.
Got it.
In that bucket.
All right, so to go to our happy place, we'll talk about RIPCO. Can we all agree RIPCO is heading in the
RIPCO.
right direction? Do we feel good about RIPCO?
We feel great.
I think
about
even
RIPCO.
looking at this shot right now, a lot of folks out there mightn't even realize the deep bench of talent at RIPCO. Gene, you're the I think 7 years at RIPCO. That makes you the longest serving RIPCO person here. How has the firm evolved over those 7 years?
It's been an amazing journey for 7 years now, and obviously those 7 years include the COVID years. And what we have accomplished with my partners, Peter Ripken and Todd Cooper, we think is amazing, and it's really based in the people. It's you guys bringing your teams on, expanding our business, not only through people, but adding the categories and the different disciplines, investment sales, the debt business, our leasing business, our business in Florida. And, when I came here back in 2018, we basically tripled the size of the company in 7 years. And we've done it in a very deliberate way. And what I think we're very proud of is we've maintained the culture of the company. The culture is constantly changing, but it's a good place to be. And people don't get stressed out on the inside. And having lived most of my career in that type of stressful environment, I like to say, you don't need the wind blowing in your face at home. You need the wind behind your back. And you come to RIPCO, the wind for the most part stays behind your back. Yeah, we always have your issues and stuff, but the wind's at your back. And the time I spent in the corporate world, they say at times the wind blows very much in your face. And I think we've all experienced a little bit of that. So that's what I feel about RIPCO, and I think we have an extremely promising future. I'm very proud of, from a retail leasing perspective, we are the #1 firm in the region. We are doing more retail leasing transactions than all the corporate firms.
Almost 1,000 a year.
1,000 a year, yep. And we have, we cover the market like no one else, meaning, the New York City and the 5 boroughs of New York City and Long Island, New Jersey, Connecticut, and it's quite a thing to say that, you're #1 in the largest marketplace in the United States, if not the world, we're proud of that. And it's all our collective efforts. It's what you're doing here today, taking the initiative to introduce us to the world and have conversations. And yeah, we appreciate that.
Yeah, listen, it's been a good home for my partner Mitchell and I. I think RIPCO backed our play. We had a vision, and a lot of firms were like, "You're too early on." You know, we put a lot of stock in what we were trying to do. RIPCO really bought into it, and I think, Steve, you really forged the path for investment sales at RIPCO, because quite honestly, when I thought about RIPCO, I thought about retail leasing. I was like, what does that really do for my business? But when you went there a couple of years before us and you brought your team, and I always enjoy picking your brain on how you built your team, because I think you've really done something special with your team, and you proved the concept for us and made it an easy transition to go over to RIPCO, because we saw what you had already built, and we're happy to help kick on with the growth there. But what inspired you to join RIPCO? You could have joined any firm in this city. What did RIPCO do that you really felt this was the right home?
I had a real clear vision. I've seen smaller firms, I've seen larger firms, and my team and I, we're a machine, right? So talking about tailwinds and headwinds, we wanted tailwinds. We didn't want headwinds. We know how to execute. We know how to run a large book. We know how to sell $1 billion a year in real estate. But we did not want to go to a smaller firm where we're building the firm itself. RIPCO has a 40-year background, great people. They've proven out, obviously, the retail leasing side. I know they've sold things here and there. But I saw this as a great partnership where you had a sound company that's been doing it for decades. They did retail leasing at the highest levels, better than anybody else, to Gene's point. But in my mind, bringing our investment sales team and marrying that with, I like to say, synergistic retail leasing, right? Because there's these larger firms where you may have every possible service line, under the sun, but no one's talking to each other, or they're in different markets, or they deal with different price points or different owners. My clients are their clients for the most part, right? So I saw that as a synergistic marriage, that if we put this together, we can have something real special. It's actually 4 years in August that I've been here. We're closing in on almost $2 billion in transactions. We've given over probably now in the range of 45 to 50 retail leasing referrals, which in my previous 17 years before I got here, I can count on one hand how many of those actually got executed. So I think overall that the synergies is second to none. Working with Gene and the other partners, the other senior people at the firm has been nothing but, great, to put it simply. And I guess to further the point here is that, we were missing one part of it, which was the debt and equity part of it. I think I was courting you for a couple of years before we got you on board, but I think overall we've made some strategic add-ons. Obviously them bringing us on, and then us bringing some other good teams to run alongside with, like you guys, you and Mitch, and then obviously the debt and equity side. We are a force to be reckoned with, and now our market share across all of those service lines, are some of the tops in the city.
Adam, just building on Steve's point, which I totally agree with, the debt side of it, especially a presence here in New York from a high producing team, is something that we really were missing, and now we have. And for you, so it actually just struck me, you're the only one here that never served time at a public traded company. Was that by design, or was that necessity?
Yeah, I think both. I don't think I would sit well in that world. This has got a family energy. I worked at Eastern Consolidated back in the day, and that was a similar company, right? And for those of you who remember Dawn and Peter, they were great people, and they ran a company similar like to this. These guys are best in class. We were chasing them at the same time they were chasing us.
That was Massey Knuckle.
There really is,
Eastern.
the Massey Knuckle offshoots, all the guys. I like the synergy with them, and I've always wanted to work with a sales team. It's been the missing piece in our book. We are having the best year of our career, by far, by the way. It's nuts. And a lot of that, I don't even know how many referrals we've got from you, but enough to justify this world.
There's not a day that goes by that we're not talking,
Yeah.
either you to me or
100%.
James to my guys and girls.
Every day. And so there really is an overlap here. So I love it. This is it for me.
After Eastern, you went to Meridian. Meridian are like unbelievable powerhouse, right, in the space. And obviously, you had a great run there.
Yeah.
How does RIPCO compare to something like Meridian? It seems like it has more synergies with Eastern.
Yeah. That's true. Like Meridian's, they're great at what they do for sure.
I hear
Ralph is-
stories of boiler room guys pounding
No,
phones.
that's not true. But
No?
look, Ralph's best in class, so you can't really debate that. They've done a great job over there. They really have, and they gave me a really good opportunity. My energy fits here better. It's really, there's no other way to say it. And I have to tell you, when you've been doing this for as long as we have, it really is about who you work with every day. There's no other way to say that. And so this is it for me. It's my last stop. There are no more stops.
When you go to lenders with projects, does it matter what firm is on your name, or is it all about you?
It really doesn't. No, it's our reputation for 30 years. It's knowing everyone in the business, right, for a long time. They know who you are. A friend of mine once told me something, and I've never forgotten. I told to my kids, you spend the first 20 years of your career building your reputation, and you spend the next 20 years spending it. And so, yeah, we know everybody now.
What are you telling me? I have one more year left.
That's a good point. My partner James is, his knowledge is one of the best in the whole business. He really does a good job of it, and I know everyone. After a while, you got to know everyone, and you know how to get things done. You know how to get them done. That's the best way to say it, I think.
Gene, why is it important to have all these businesses under one roof?
Well, I think that you do this all for the client, right? And your best client is your existing client. And I didn't make that up. That was Ed Gordon saying, your best client is your existing client. And to the extent that you could deliver more services to that client in that vertical, from the birth, the full life cycle of real estate, that's really what this is about. But it happened, overused term. It happened organically. It happened at the right time. And, Stephen and I worked at Cushman & Wakefield together, and we really didn't know each other well, but, he knew my reputation, I knew his. And when he was considering coming here, he calls me up. He basically says to me, is this real? Because he's going to make a big move with this guy. I said, it's real. Like, we're going to deliver what we're telling you we're going to deliver, we're going to deliver. And did we deliver exactly what we said? Yeah, we didn't, no BS, we delivered. And I think that we have a very unique platform of very experienced people who have seen, they've sort of seen it all. And what we do here is we don't pigeonhole anybody, right? Everyone knows their discipline, their expertise, right? They what you do best, but the ability to just cross-pollinate is in such an unforced manner. And in the corporate world, they try to have you cross-pollinate. Very few people do it successfully.
That
Very
open
few.
runway is key. Is everything.
And we do it here much more fluid. And, if you want to sell a property, you could do it, but we don't encourage it because you're not the expert. So people just naturally gravitate, say, you know what, I'm just going to call Steve's team, or they're going to call you guys because, everyone's fair. We have exactly right now with 150 plus transaction brokers in the markets, 0 commission split disputes. 0.
Yeah.
We don't have them.
Right.
People just realize in the end of the day, it's a volume business. Just keep feeding the pipeline, make it fair, do the deal, make the client happy, move on to the next deal. I lived in a world where every deal was life or death for people. Life or death. And they treated it like that. And guys and girls who made fortunes, and they treated every deal as life or death. And it was a battle to the death with fees. Battle. Hated that. I really hated that. And when I ran Cushman & Wakefield's retail services, I was the guy in the middle of all that stuff. And I said, never again. Never again am I going to do anything like
your
that.
energy in the execution and your client rather than fighting
Horrible.
internally?
The business is hard enough without, as you said earlier, bringing it home. And
Like in The Godfather, it's our thing here. We
It's
have
our
our thing, and that's the special part of RIPCO. Whatever it is, it's just our thing, and it works.
I like this, by the way. I like our business.
Yeah.
James said to me, he goes, when are you going to retire? I said, retire? What does that even mean? I like doing this. I wake up in the morning.
I had someone
like
say
what
that
I
to me
do.
last night at the Vernado event. When are you going to retire? They're like, we want,
Stay
it's
home
time
and
for you
do
to get
what?
out of the business, Where am I going?
No, I like this.
I imagine because it's so hard to get started and get up and running and get momentum. I imagine then when you get to the stage that
Yeah.
you're at, it's hard to walk away when you feel like you have all of the seeds planted.
I get, yeah.
Ma'am Donnie could be that walk away moment. I say to myself, I'm not going through another, upside down cycle in New York City. I'll go do real estate elsewhere. I don't need to leave real estate.
And that's
I
Gene
just don't need to
Spiegelman,
cross
40
the
years
river.
in the business, and that would be your breaking point.
Had enough of it.
Right.
Why
Right.
why knock your head against the wall?
Right, I hear that. Steve, for you, open runway, you mentioned that RIPCO. What does open runway mean for you?
Well, I think a lot goes towards what Gene was saying as far as being able to just run my business without impediments put in my place just because of bureaucracy or red tape, right? I built a business where we sold, almost 40% of one borough. Why can't I take that and do it in the next borough and the next borough and the next borough and build my team from 8? And now we have 27 investment sales professionals over at RIPCO. Those parameters that didn't make sense just because they were there at a larger company. So, with RIPCO, again, to Gene's point, they said everything that they were going to do. They built us an office, and they said, go and run your business here. And working with the professionals, the army, I call it here at RIPCO, it's never combative. And then any business that we give anybody internally, I feel 100% confident that they will execute on that properly and withhold my relationship or my name with my client. And there hasn't been one instance where we felt otherwise, which is crazy to think about over 4 years and hundreds of transactions already. So I think that open runway is us to run our business, us to expand our business without putting things in our way that really doesn't help our business in any way or just bureaucratic. And then also, speaking to anybody, everyone has an open door. The partners are all working there, every day. You can tap on their shoulders. And to me, we move very, very quickly. We're highly transactional. We have a lot of volume. So I want my listing agreement signed in an hour or two. I don't want it to have to go through a two week period of going back and forth between attorneys in some other state, right? So I think being able to move quickly, the support when you need it, that's the open runway for me.
I want to add for your business in particular, and we're going to be able to say this about your business not too far down the road. We have 177 properties listed for sale now, which only a few years ago was zero, right? It's 177, and I think we're in 9 states now. So we're expanding our reach substantially, and I think that's also a lot of promise for us. We're moving beyond the New York metropolitan area, by design to do that, and that's really important to us. So we're really proud of that accomplishment. And we're also really working to be ahead of technology too. It's not easy to do that and deliver technology solutions to our brokers and ultimately to our clients to do that. And we're making the time investment. You have to have a lot of patience to deal with the technology changes, software changes, but we're really trying to make this business as forward-looking as possible, but also keep it simple, stupid, right? We don't want to overcomplicate it for ourselves. So
We're back. Another season of the Broker Brunch podcast. Summertime in New York. We've got a lot of exciting conversations coming up. We hope you enjoy listening.
Adam, you said this is the last stop for you. You're building out a team, even though
Yes.
you said you're 30 years in it. You're building out a young team too. These guys are young and hungry.
Yeah.
Your partner James
You need that.
is he probably brings a nice balance to what you bring with your experience, right?
Look, you can't replace years in this business. It's just you connect a few extra dots every year, and by the time you're, my age, you know all the dots. The thing about it, when you get experience on my side of the business, is we don't have the answers to every question, but we know who to call to figure that out. I'm working on a crazy transaction right now. Guy's got $5 billion in London. Foreign national wants to bring it here in an LC structure, needs to borrow against it, and we're making phone calls, asking who to call and how to structure that, because it's something I haven't seen before. It really is out of the box, and we know who to call. And so that's what you're buying when you buy someone on my side, right? You're buying my experience. And James is younger, Alexander is also young. Yeah, you need that too. You know,
Need that a bit of
absolutely.
fire in the
Yeah,
belly,
get a
right?
little-
Yeah.
I need my 3 o'clock nap.
Yeah.
Every day I need my 3 o'clock nap.
I don't doubt it. All right, so in closing, we're heading for the second half of the year. I think ultimately there's concerns, but generally everyone's feeling pretty good about where we're headed. Steve, for you, what's the one thing that you're trying to nail in second half of 2025?
To close out everything we've been working on in the first half, I think to see our way through some of the turbulence and some of these headlines that we talked about. New York isn't going anywhere. It might get a little tougher here and there, depending on who's sitting in the seat next year. But overall, I think the capital is better here than anywhere else.
Gene, is there any bold predictions you're willing to make about second half?
I think the macroeconomic outlook is pretty good, and I do think we get a rate cut.
Okay.
And I think we're all going to be looking at November, and that will really sort of dictate what the city's
The macroeconomic
how people are
outlook.
going to feel. So it's the micro,
A rate
political
cut
situation,
would
yeah.
help
Rate cut, yeah.
digest where we think where we
but,
might be going.
I'm pretty confident in the macroeconomic outlook, sort of coast to coast outlook on things.
So feeling good, going to close more deals. Adam, how about you? How are you going to round out the year? This is your best year yet, you said, 25, right?
The
So
macroeconomic outlook is good, right? No matter what goes on. Zohar could definitely affect that. But if I had one thing that I would say to the city is if you want affordability, Zohan is not your answer. Let us build more. Stop with the nonsense. Stop restricting the number of hotels I can build. I'm the #1 hotel finance broker in all of New York. I've done 80 or 90 transactions, many for Sam Chang and for others. And you can't build them anymore. They've changed the rules. They changed the rules on the 421A. Let us build. We will build volume. We will build us into affordability. That's just how it works. Restriction of supply does not lower price. It's that simple. So that would be my only thing I would hope for. And Zohan will restrict supply more. So
a lot to come, I guess, over the next few months. We'll have to have you back in. Maybe year end would make sense after November. See where we're at. Maybe we'll be drinking on that one. It might be closer to the holidays, and we might have reason to drink.
We could bring the bottle back on Fridays.
We'll bring the bottle. It's still half empty from the last time,
Fridays.
right? But boys, I really appreciate
Thank you.
you coming in, and it's a pleasure working with you all. Looking forward to
Thanks, Brian.
the
Appreciate
second
it.
half.
thank you.
Thanks, guys.
Cheers.